All right. So, question is from Cage. Ian, how do you cash out? I don't know when to sell and then to lose all my gains. Well, first thing first, we had a video on our YouTube channel that answered exactly this question. So, if you're not subscribed to Token Metrics YouTube channel, you are definitely missing out. I mean, I keep repeating this on our live streams, but we post daily videos. So this is youtube.com/tokenmetrics. So this video here, 13 minutes long, how to take profits from investments. Definitely recommend you go watch that to learn how to cash out. But in general, I would say, obviously not financial advice, not investment advice, but a general principle is if you follow modern portfolio theory, so if you follow that, you're pretty much good. So if you just rebalance your portfolio at a set period of time based on your investment criteria, then you should be good. So for example, an example we always give for token metrics is if you're going to invest in, for example, the top 10 cryptocurrencies based on overall grade and token metrics rank, and that's your portfolio, you have 10 cryptocurrencies. Because I would say to have a diversified portfolio, you have to have minimum 10 cryptocurrencies. So if you read the book, The Intelligent Investor by Benjamin Graham, they say minimum 10, maximum 30 to really have a diversified portfolio. So if we take that same approach and apply it to crypto, I would say the same thing. So minimum 10, maximum 30 cryptocurrencies, but I kind of like to go more towards the low end. So let's say minimum 10, including Bitcoin. So that's your portfolio. And you say, okay, I will rebalance my portfolio every, the options you have are weekly, monthly, quarterly, annually. Let's say you're a long-term investor. If you're a long-term investor, you would use Tokenmetrics long-term grades to rebalance your portfolio every 12 months, every year. So you take the top 10 grades based on long-term overall ratings, build a portfolio. How you break that up, the allocation is up to you. A simple way could just be an evenly balanced portfolio, meaning that you would have, let's say, 10%. So if you have $10,000, you put $1,000 into 10 cryptocurrencies. I would probably maybe even add in DAI stablecoin. So you always have some liquid cash crypto reserves to make trades or for other things. But let's say you have 10 of the top 10 long-term overall ratings grades plus DAI, so that's 11. So that means you actually be putting 9% into each cryptocurrency. So this is also a newsletter we sent out to our customers over a month ago. So it should be in the archives for anybody who joins Token Metrics. So let's say you have 11 cryptocurrencies, including DAI. I would take the DAI option, put that on a lending platform like Celsius Network, BlockFi, or some other platform, basically, and just stake it and get 7% or even more. Then the other 10 cryptocurrencies, you're putting in 9%. So going back to the example, if you have $10,000, you're putting in $900 in DAI, $900 into 10 other cryptocurrencies as well. So that means Bitcoin, Ethereum, all the other top 10. And then the period of rebalancing is once a year. So every 12 months, you go back to the portfolio and you see, okay, what cryptocurrencies are now out of the top 10 long-term grades. So if let's say Cosmos fell out, that means you would sell all your Cosmos. So that means sell, take profit or take the L. And then let's say some other cryptocurrency joins the top 10. Let's say Blockstock or Helium joins the top 10 and you don't have it yet in your portfolio. Then you take that money and buy that. So this is modern portfolio theory. There's lots of literature on this. It's pretty widely used in the space. Almost all investment managers, money managers use this. Robo-advisors use this. This is kind of what we're working towards building with Token Metrics with the robo-advisor, and the indexes we're creating will be doing the same thing. Now, the main thing you really have to do is focus on the portfolio allocation because things are different for everybody, and also focus on the period you rebalance your portfolio. So if you're rebalancing your portfolio, let's say you aren't doing long-term, let's say you're a trader and your portfolio, you rebalance it every month. So every month you would rebalance your portfolio. If you're a trader, you probably would not use long-term ratings. You'd probably use short-term ratings. So, I mean, at a high level, that's really, in my opinion, and also based on lots of academic, yeah, I would say lots of academic literature and research, that's the best way to really rebalance a portfolio. Now, the reason why this is very powerful, now this is the part you definitely want to pay attention to, because sticking to a period to rebalance and sticking to a portfolio allocation it forces you to buy low, sell high. Let me repeat that. It forces you to buy low, sell high. Because let's say you have, so just a recommended allocation of 9% for those 11 cryptocurrencies, and one of them goes to 15% allocation. So 15% of your portfolio is in Bitcoin, because Bitcoin has gone up a lot, while altcoins haven't really done much. So when it comes to time to rebalance, you have to get Bitcoin back down to a 9% allocation. So that would force you to take profits. So you basically take 6% of your portfolio's profit to bring Bitcoin down from 15 to 9%. And then it forces you to buy the dip. So let's say some other altcoin in your portfolio, like, I don't know, Cosmos, went from 9% of your portfolio to 3% because it's had a bad year. Then it forces you to buy the dip. And that's really how you make money in crypto. Buy low, sell high. Most people in crypto, not just in crypto, but in all of investing, lose money because they buy high, sell low. I mean, to show you how bad it is, we even unfortunately lost a customer. I kid you not, 2 weeks ago, because the customer was saying, why is the system telling me to buy when the prices are red, when the prices are down? And because this is a notion not just for him, but for lots of people in investing believe you should buy when the price is green. And that's far from the truth. I mean, if you read any book, whether The Intelligent Investor, great book, but I highly recommend the books by Howard Marks, a well-known billionaire investor. The most important thing, it will really teach you about value investing. You want to buy when prices are at a discount. And by definition, it cannot be at a discount if the price is green. It cannot be at a discount if you're buying in a bull market. You want to buy in a bear market. You want to buy when people are forced to sell. That's when you'll get the best deal. So for example, we talk about how Token Metrics, during the pandemic, when Bitcoin was down 30%, Ethereum was down 40%. Token Metrics was saying, buy the dip. Obviously not financial advice, but it was saying, we rated Bitcoin the highest price we've ever rated it. The score on Bitcoin short term was a 99 out of 100. That was the highest score we've had for Bitcoin. And people were like, do you not see what's going on in the markets? Like, it's the end of the world. It's an apocalypse. And we lost some customers because of that. But guess what? That move, textbook, buy low, sell high. Bitcoin now is at almost $9,000. So imagine being the customer who got the research saying, yes, we know Bitcoin is down to 30% in one day, but this is the best price you're going to get Bitcoin in a while. You should be buying more, not selling. And not everybody can handle that. And we've lost some business because of that, because you have to reprogram yourself and how you normally operate. Because yes, we understand it's inhuman to want to buy and catch a falling knife, because that's what people are afraid of. They say it's a falling knife. But if you're looking for a discount, because ask yourself this, when something changes, has the value changed? Typically, fundamentally, no. I mean, so for example, with Bitcoin, when Bitcoin crashed 30% and Ethereum crashed 40% and Maker crashed 40%, had the value in those projects changed that quickly in 24 hours? No. I mean, so in the book, The Intelligent Investor, they call that Mr. Market. Mr. Market is irrational. So you can't listen to Mr. Market. So the only time you talk to Mr. Market is when he's giving you a discount. So because people were selling because they're flying to cash. People wanted to be liquid. They wanted liquidity. So when that happens, that's when you get the best deals. Because, I mean, how many of you would like to buy Bitcoin at $4,000 or less right now? Everybody wants to. But guess what? If Bitcoin goes back to that price, how many of you will actually pull the trigger and buy it at that price? Because the emotions get in the way. Now, modern portfolio theory helps you take the emotions out of it, and it helps you buy low, sell high. So I definitely encourage you go out and do more research on that. Books I recommend: The Most Important Thing by Howard Marks, The Intelligent Investor by Benjamin Graham, and the other one was The Intelligent Portfolio Allocator. That one is actually a very good book. Also a very quick read. I think I listened to the audiobook in about 4 hours. But it's really about portfolio allocation. And they go through all the different academic literature, some modern portfolio theory and all that stuff. Highly, highly recommend you read those books, get educated. I mean, we're all locked down, quarantined right now. So getting more research, more education, and more knowledgeable about the market and investing is a long-term investment. It's definitely going to pay off tenfold.